Hi everybody, thank you for joining us. So today Hayley and myself are going to be talking about commerciality in a dental practice. Now the reason we're talking about this today, it's an informal discussion, but hopefully it'll give you some insight into how we look at it and why it should be important to you and your world. We think commerciality is important to every business that exists. And what we've noticed with costs not just creeping up but shooting up with fallow time and PPE increases, dentists have become more interested in how to make their practice commercial. So it's not just about profitability. Hopefully we'll get through some of the complexity. It's how your business proposition, your strategy, your clinical model all fit together to create a commercial entity, which then at the end creates profit. So Hayley, I'm sure you all know, is the MD of our accountancy business, so she's best set to tell us about this. So I'm gonna pick her brains for a bit, and hopefully it'll be useful to you. So Hayley, what's generally in a dental practice, what are the kind of key issues around commerciality? What are the historical problems around it?
Well, I think it stems from a fact that dentistry in itself is quite a cash-rich position. So dentists, because they're able to draw what they need from the business month on month, there's cash in the bank. It can kind of seemingly seem quite successful. And also for the fact that the only financials that dentists have to have prepared are their statutory accounts, which feed into masking the profitability or the commercial profitability of a practice. So quite often their accounts are prepared on income coming in and kind of cash costs that go out. So if you've got an associate-led practice, then those statutory accounts and the way they're represented do kind of give some insight on how commercial the practice is. But often your main revenue comes from the principal, who doesn't pay himself as a commercial associate, so isn't paying himself for clinical time. He might be able to draw 10k a month, but actually if you're calculating the time he's spending and the revenue that he's earning, might actually show that he should have been paid £15,000 a month. So the profit figure and the profitability of the practice really changes. So that's something that we've worked hard with a lot of our clients to get them to understand what their business model is and to get them to understand what the true profitability of their practice is.
Yeah, so to kind of really take that back, when we go into a practice and do a diagnostic day, we do a pie chart where we actually pay the principal and we expect to actually see a true profit of what, 5% or so?
Well, quite often it's actually a loss when we do the exercise, which is quite a hard thing for the person to swallow in the first instance because they've got cash, but it's kind of a case of what they don't miss what they never had. So it might be that they've got underperforming associates. By the time they've actually accounted for all the overheads and the running costs of the practice, the money that their associates bringing in and then taking as their monthly pay means they're not even covering their costs. So quite often actually we come to do the pie chart and it might be in a loss-making position after we've paid the principal for his clinical time.
So generally this isn't about it's about something fundamentally wrong rather than, are you paying a bit too much on your lab? It's like a chronic underperformance here, or you're just working too much in clinic that you can't see all the issues around. I think one of the, my man's a big advocate of the 60-40 model in dentistry, which I think as a mindset's really, really important to get your head around, that 60% of your revenue should come from new patients, 40% of your revenue from existing. So it's basically, if you want anything to kind of underline a growth mindset, it's that. The dangers that come with that are that actually, if you get a few all-on-4 cases that month that you might perform, it'll cover a whole load of bad business in your organisation. So your revenue will be through the roof, but actually you may actually be losing money on each of those treatments.
Yeah, and I think it's quite often when we present, so we, as you mentioned, we have the pie chart, which is basically just it splits out where your revenue is going. So we apportion it into common things like what proportion of your revenue is wages, what's lab, what's materials, what's your premises costs. And a common question I get is, what's the perfect pie chart? Well, what should this look like? Because we'll kind of say, oh, your wages looks a bit too high, or and there is no one size fits all answer. It depends on what your business model should be and what your strategy is. Because if your strategy is to double your turnover, then one of your big segments might be marketing, but that's right for your strategy at that time because that's what you're investing in to grow your revenue. And it also might mean that your staff costs are higher than what we think they should be, but that's because you're tooling up, you're getting a team that's ready to take and cope with that extra revenue. So it's about understanding what your business model is now and how that fits with what your strategy is. And quite often clients don't necessarily know what their strategy is or may think it's something different, and when you kind of really work through it, it turns out to be the complete opposite.
It's really important to have documentation over stuff because whatever I find that people's strategies of whatever fits for that thing at the time. So if we said, you kind of tooling up with a load of team members because you're going to grow, and then that proportion will obviously shrink. They'll go, yeah, that's what I'm doing. But then you go, okay, but your marketing budget doesn't reflect that. And they go, but actually I'm just trying to save a bit of cost there because I need to make sure I'm getting paid 10 grand this month. So that's why it's really important that this proposition of what it is you're selling and what your objectives are married with the financial model, which is why we've both been in the room a million times where people get incredibly frustrated with Ross, and he is refusing to tell people what the standard benchmarking is. And going, Ross, please tell me, can you put together a standardized pie chart? And he won't do it for the very reason that it's completely arbitrary, and everything's arbitrary until you decide it's important to you. Michael Cernick's second webinar he did for us actually kind of dug into this, that I think it's more in America that they have standardized benchmarking for how your practice should be performing, which kind of might be useful as a conceptual exercise, but actually every business should fundamentally be different, and you should be looking to create competitive advantage in different ways. So yeah, that's kind of what we're kind of really trying to push home to our clients at the moment, that don't be basing your clinical model on how dental practices used to look either, because it worked in a time where you could just basically be profitable by selling more, or you could make money by selling more. We're not saying that that's not true anymore, but actually you need to look for more wins throughout your business. So I know we're working with a big practice in the Southwest who's actually looking at changing the clinical model, whereby you can actually, it's an American style thing, but you kind of have a therapist-led model and move from room to room, where you might have apprentice dentists in each room. So you're able to cover vastly more treatment with less cost. So that's not interesting just because it creates more profit. It's interesting because it gives you a competitive advantage. So you could then go to market and offer, the dentistry at 40% less than everyone else and still be more profitable than everyone else. So hopefully, Hayley, is it fair to say that historically it's been an issue for us to get people excited about numbers?
Yeah, which I get. So I think a lot of the role that people see me as an accountant is, what expenses can I claim? How do I cut my tax bill? So I think there's just so much more that we can offer and accountants can offer. We can help you to understand your financials. We can come up with different ways to cut your tax bill that basically are just restructuring things that seem really obvious to us, but it's kind of the sort of thing where people don't necessarily really understand the ins and outs. It's not that interesting. And there is a level of trust as well. You have to kind of take the leap and not necessarily understand the ins and outs of everything, but kind of take advice and just have action. I think previously it's been the tax realm, it's been easier to kind of reduce your tax liabilities. It's getting harder, you have to work harder. But when you're looking at a person's financial position, you can look at their business model, you can try and increase their profit, but the biggest cost to them is their tax bill. And it's something that I think people can kind of get fixated on cutting costs or what they can get this implant for, and kind of ignore the bigger picture, because it's an area they're more comfortable in.
I do think there's a bit of an issue with the peer group in dentistry. So I can always tell when my clients have been to a trade show, they've seen their mates and they're saying, oh, so-and-so down the road's doing this. Should I be, I don't know, charging expenses back to associates, all this stuff? And I'm like, maybe. It completely depends what your strategy is. So whatever they're doing, they may have a really good reason for it. You know, we can generically say that most of the time it's a good idea to incorporate, but it's not a good idea if you're selling your practice in the next 2 years. So you can't give simplistic answers without understanding the situation. So it's this, I don't know, it's a challenge for us for how we make it exciting, but actually the biggest wins you'll get is by just controlling the numbers of your organization. And that's not being, by being, we're kind of saying just be really frugal. It's kind of not that at all. It's just understanding that if you're spending £1, it's the best thing you can spend that £1 on for your strategy.
Yeah, engaging, I think, is to engage with the process. Have up-to-date financials, so you've got kind of a clear understanding on where your money's going, what that means, is that the right decision to make, should you invest in that, what to do at what time, basically. So
this isn't the same as, you know, if you're preparing a forecast so someone can get finance from a bank, is it? That's not commerciality? No,
and that's quite a common thing that we come across with clients as well. So clients looking to buy a practice, the bank will want a forecast to tick their box. It's something that we always advise clients to do anyway, but the forecast that we prepare for a bank won't look the same as their forecast. So a bank quite often, if you go into a practice and you're looking to really grow it, you're looking to invest in marketing, you're looking to change your staffing structure, to offer loads of different specialisms when it's always just been a general dentistry practice, all very kind of common aspirations and things that people can succeed in and do succeed in. But if you put that lovely master plan on a forecast for a bank...
Close this window, my daughter's crying out front, so that was fairly distracting. Sorry, Hayley, go on.
So if you relay all those kind of different aspects into a forecast, which is really useful for you because it presents what your business could look like for you, and what your revenue targets need to be, set some kind of boundaries for you and what you can expect to draw. The bank just won't look at that. It's kind of too outside of their parameters. They want to see kind of a nice, quite plain forecast that shows minimal growth, minimal changes in the cost base, and that you can afford to repay their debt repayments. So the forecast that we prepare for them obviously has its purpose, but if you're going to make the biggest investment of your life, you should invest in getting kind of a forecast which is solely for you and what your plans are as well.
Yeah, so it's kind of like a semantic trick that it sounds like the same thing, but they're two completely different things. One's literally so you can secure cash. The other one is so you can be confident that you can make enough money on your investment, essentially, or it kind of makes logical sense. So how does someone start to get commercial and kind of think commercially in their organisation?
I think, well, the first step is understanding where you are now. So a lot of people that we speak to, because you don't necessarily have to have any financial information prepared for you, other than on an annual basis, which is usually kind of historic information, don't have access to up-to-date figures. So we recommend cloud-based bookkeeping because it just facilitates that. It's quite automated. So you know what your incomings and outgoings are at the moment, and then to kind of seek some advice. So come and speak to us, or if you've got another accountant as well, that hopefully will be able to translate that for you. So we like to present things in a visual format, which is why we use the pie chart. So we undergo exercises where we take your financial data, we reinterpret it, and then we have conversations and kind of working sessions with you to ensure that you understand what those figures mean.
Hmm.
And then alongside with yourself, the consultancy team to tie that in to where you are now and where you want to be.
Mm. Well, I might be a little less diplomatic on the speak to your own accountant. I would say speak to Hayley and her team, purely because your advisors are probably costing you money at the moment. And I see enough new businesses on a daily basis, and simply there's massive leakage, not just on tax, but they're often the big obvious things. It's just simply by having no understanding of the financial model of the business. And like we've said before, it won't mean that your business is dying or you're not earning a lot of money. It's just you're not earning as much money as you should be if you're running the business commercially, and with a clear purpose. Is there any kind of next steps that you'd suggest to people? Is it just get in contact with you, Hayley, for a chat, or is it that?
Yeah, I think that's the thing, because I think probably what's coming across is there is no one size fits all answer, or kind of one, other than get your financials up to date and get some understanding. Piece of advice that I can give to everyone, it will depend on what your circumstances are, whether you might be looking to sell in the next 5 years, you might be looking to buy in the next 5 years. Kind of the advice and what to do and when would be completely dependent on your circumstances. So yeah, happy that we encourage people to come and talk to us, and kind of there's no hidden fees or anything like that. It's just an open conversation, and we'll kind of get to know your circumstances and see if there's any ways that we can help.
Brilliant. Well, we'll share our contact details along with this, but thank you for listening. Sorry for the disturbances. Sorry that we're all dressed in beige.
Very dull.
Rather interesting shirt, which Hayley didn't comment on, which is interesting. But thanks for your time today, everyone. Cheers.
Thanks.